Yeah. Good afternoon, guys. Good afternoon. If you can hear me, can you just put a 111 in the box so I know if my audio is working over here? Okay. So today I will be talking about trading NFP using smart. I said I was going to talk about market structure sharply. So let's just get into that quickly. So welcome to TenFingrs channel. If you are new here, please do subscribe and turn on the post notification as I'll be posting a lot of educational content on trading, technical analysis and psychology, and maybe sometimes record my journey in trading. So let's just get into the chat, and because we have about 30 minutes, and I know you guys, the market is still on, and you want to go back to your chat. Uh, okay, so what's market structure essentially? I guess this is not a new word to anyone else that is trading for a couple of months or a couple of time now. Market structure is simply your highs and lows of price. The price movement, it forms a particular pattern, and this pattern is what you call the structure of the market. So you can have your highs and your lows in as the market goes on. So in this case now we have our markets trending up. So we have our high here. Okay, I don't this is you have this as your high and you have this as your low. Similarly with a downtrend, you have your high and low in a downtrend. But now what now differentiates your downtrend from your uptrend is that you have consecutive higher highs and you have consecutive higher lows. But in the case of a downtrend, you simply have it as a lower low. As it goes lower, the low becomes your lower low, and the sequence continues on and on until you have you have a change in trend, and this is your lower high. Then this also is your lower high. Now, how do I know this is a downtrend? I know it's a downtrend because there's been a shift in the market structure. Now, what we call this is a break of structure. A break of structure simply signifies that you are about to change the trend of the market. So you have it trending upward, and all of a sudden you have a swift momentum to the downside, and this momentum continues or it carries on till you have another switch or a break of structure again, and it continues on, and this is how you have your price movement generally in the market. So you have at some point you have low prices and you have the market switching up, and you have high prices then the market switching down. So the market cycle continues on and on like that, and that's why you can have that's why you can have trade ideas, because the market is always moving up and down. Without a down movement there can never be a up movement. It's more like you are it's a negotiation between the demander and the supplier. So if there is no supply in the market, there can be a demand. So the price has to come down. In this case now, the price has to come down before it goes up. Now, where does that bring the institutions in? Now, we know as traders that we ourselves can't move the market as much as this. We have very little volume in the whole of, I think, about 1 trillion market cap of the forex market. So Who moves this market essentially? We call them the institutions, or you call them the banks. In Wyckoff term, Wyckoff coin, however you want to call the or money makers or market makers, whatever term you want to use to call, to identify the people that move the market. So these guys have a lot of money at hand, and when we're talking about the money, we're not talking about 100 lots. They don't deal with lots. We are talking about guys that deal with the currencies themselves. Say they want to, we are dealing with AUD USD. They are dealing with the hard currency of AUD. Say they buy AUD from the bank and sell it um, in respect to USD. So that's what we're talking about here. So they should be buying a high volume, and they don't have access to leverage as you do. They don't have access to about 1:500 or 1:1000 or whatever leverage your broker is offering you. Sometimes they use a leverage of 1:1, or you could, for hedge funds, you see them using a leverage of 1:3. So they have to have a large volume of funds to be able to move the market up to this point. So the same person that buys at this point, and once it gets to this place here, the momentum of the market begins to reduce. Now, because of the momentum reducing, these same persons that buy here, because they have enough money in the market, they induce this sell so that more supply can enter the market. So once they induce sell, other people or other interested candidates in this sell will get into the market, and once it meets their demand, they begin to drive the price up again. So they repeat this sequence over and over and over again. And this particular sequence is what causes your market structure. So essentially, it's not just a random market movement. The ups and downs you see are transactions between two parties, the demander and the supplier. So whoever is selling here is selling to a person that is demanding here. And because of this demand is very high, or is the main movement of the market, you see the price going up, eliminating all the supplies. And they do the same thing here, induce sell, other suppliers join in. Once it reaches enough demand, they carry the price on again. So they repeat the sequence over and over again. And one thing is, since these guys are dealing with a large fund of money, even a 0.1% decrease in uh, the price movement can cause a large loss on their side. So what you see is that they keep the funds, or the quantity they bought here, they protect it by buying more funds over here. So at this point, they have another uh, investment. They have a major investment here. They have another major investment here. And this major investment drives this price up. And because of the supply diminishing, they induce again, bringing the price down to meet their demand again, until they get to a point where they begin to distribute and reverse the price to the downside. So that's just about your market structure. So essentially, you know for sure that if your market is trending to the upside, you are trading with the banks, because the banks will definitely want to be in loss. Where they bought from, they will definitely protect their profit. So if they are in profit here, you will not see the market coming down to take this previous low. The only time it will take the previous low is after they've taken all their profits away and they are ready to mark the price to the downside. So that's the only situation where you have the market making or creating another market structure or going to the downside. Now, how does this affect us trading news? Since we know that the institutions are involved in this whole price movement, or the market, or the movement of a particular currency, why should news now affect the fact that, since they bought at some point, why should they bring it, or why should any news bring that price below where they bought? the same institutions that bought here even during the news are still going to buy when it comes to a demand zone. So say for example you have a news by and say we have a news in next 1 hour 30 minutes or thereabout. So and you have your market structure going up because you see, because probably some people check the old data dollar, or you check investing.com or some other news source for forex, and you see the dollar getting weak, does not mean this will continue to the upside. Or you see the dollar getting strong, and because the dollar is getting strong, you now begin to see it's breaking structure to the downside. Now, the only situation where it's allowed to break a structure to the downside is if on a higher time frame you have you are in a downtrend on a higher time frame. So basically, what you are just following is an higher time frame. What the news is following is an higher time frame price movement or market structure, and that's why it's quite effective to check multiple time frames to know exactly where you are and what you are doing. So you don't just get stuck in one time frame, and you begin to ask yourself, okay, what did I do wrong in this case? If you checking multiple time frames for your analysis of market structure helps you to understand how and where you are going in the whole market. So I'll just give a quick example. Let me just delete all this and get in the chart real quick. So I'm on AUD USD chart now. I'll be talking about some other pairs too, because I'll be doing a quick market analysis on them. So AUD USD, I think I posted this on my Telegram channel about 1 month or 2 months ago. So AUD USD over here, this is a monthly chart, and don't mind, oh, okay, I don't, if this is your monthly chart here, and if you would trace your monthly chart down to this point, we have been bearish up to this point. Now, what do you see the market do? Just like I explained, you see a break of structure. Now, what does this break of structure mean? It means the market is ready to go to the upside and negate the downside that it has been coming through before. So on our monthly structure, we have this as being bullish, and this is our last higher low, and this is my higher high. And so what do you see the market do recently? You see it's pull back up to this point. All right. So at this point here, we have our monthly higher low, and this is my monthly. Brought in other sellers into the market, and once it got to this demand zone here, and this is a demand zone, this blue block before the engulfment is your demand zone. So they brought it to this demand zone here, and what do you see the price do? A swift movement. See how the candles are very huge. We have a swift movement in price, so we can inconclusively call this our monthly higher low. So what do you expect the market to do? You expect the market to give you a monthly higher high. A very bearish structure on the weekly. You have your weekly higher high. This is your higher low, higher high. Then it breaks structure over here. It pulls back to form lower high, your lower high, and it pulls back again. This is your lower low, your lower high, pulls back, your lower low, and this is lower high. Then you have this. So what you are expecting now is that after since we've had a breach of our weekly lower high, you expect a pullback down to this point to give you your weekly higher low, and sequence continues on and on like that. The sequence continues on and on till you form your monthly higher high. So with that in mind, let's just go into the lower time frame and look into the whole structure and possibly get some clear ideas for an NFP. Then we'll look into some other pairs, some other trading pairs, forex pairs, and possibly check gold before I finally end the stream. So if you have your questions, you could just put it in the chat box. I might be replying them later or replying them offline. I might not get the time to reply every question I'll be having on the screen here. So pardon me guys. This is my daily structure has been broken over here. Has been broken over there. So this is an higher high automatically. So what you are expecting now is that you form an higher low. Now looking at AUD USD with this chart here, you have a block sitting right here that will possibly give you a reaction to form your daily low before it continues to the upside. So what's my trade idea for NFP? I expect on let me just go into a lower time frame. So my trade idea for NFP is that once it's at some supply zone now, I'd expect this one to hold. So I'm looking at this one here, and also looking at this supply zone here. So I expect that the market, goes over to this supply zone, breaks my 4 hour structure over here. That's if it doesn't form under 4 hour structure. Breaks the 4 hour structure over here, find a demand zone, possibly at this point, before continuing to the upside. So that's strictly what I'll be doing for NFP, and whatever news that comes up for during the week or after now. So it's just as simple as you following market structure to create your news. And one thing you need to know is that there are things that we call liquidity. Now, liquidity is at that point where there are high demand or high orders waiting to be fetched. So at this point, you see me marking this checkbox here. Now you see this equal highs over here, or the double top over here. They are just points of liquidity. Why? Because you have a lot of orders waiting around this point to be taken. You have your stop loss here. You have some buy stops over here. So definitely, because of a lot of orders sitting over here, and the banks, since they want to drive the price to the downside, and a lot of orders sitting over here, they will tap into those orders. And these orders here are called demands. Since you have buy stops here, and you have, if people are selling, you have double top. So people are definitely selling. So they will put their stop loss here. So this stop loss is in form of buys, and you have them in form of demand. And now, because the banks are ready to bring the price to the downside, you have supply meeting demand. So the bank supply meets a lot of orders over here, or a lot of demand over here. And once the supply eliminates all this demand, it's enough to drive the price to the downside. And that's why you have the market, or you have the price piercing into this double top and swiftly returning to the downside. And that's why you see a lot of people, or a lot of people that use double tops and some other patterns, they say they are being stomped on. there's is necessarily no stop point. It's just the banks looking for enough orders to fill or to match theirs so that they can bring the price to the downside. So concerning the trade idea of on AUD USD, I said I was going to I'm looking to short AUD USD. I'm actually bullish on the dollar in this case now. So just because the market structure says it is up does not mean I have to continue to buy this thing to the upside. One thing you need to know is that once the market forms an higher high, it definitely needs to form an higher low. So this this in mind is what I'm using as my guideline for trading AUD USD. So I'll be looking to get into this point here. Once the market taps into this point, then the price should bring it down. And the following week, we should have a reversal again to continue our daily bullish market structure. So that's for AUD USD. So quickly, let me just look into DXY because from DXY, I'll be able to talk about some other pairs. So on DXY here, on the daily, we call this your Wyckoff schematic, and it explains that the market is about to reverse. This is a distribution schematic. A distribution schematic simply means the banks are no longer interested in carrying or in rallying this price to the upside, and they want to reverse this whole thing to the downside. So that's what distribution means. Now, in this case, now why is it even after I said this is a distribution? Why am I being bullish on the dollar? I'm bullish on the dollar because we have broken a structure on the daily here. Now, this is my daily lower high, and this is my daily higher high. Now, it breaks structure to the downside to form a lower low. So what I'm expecting now is that it forms a lower high at the supply zone and it continues to the downside. Now, don't get me wrong, this whole move can happen within this NFP. It depends on how strong the news is. If the news carries this price to the upside and it takes it to a supply zone, definitely expect the price to fall down. So for NFP today, you could have a very bullish move to the upside, and you see it's also almost reversing immediately. It has happened a lot of times where the market buys, then you now see it selling all of a sudden. Now, what they are just following is structure. There's nothing more, nothing less. So once just mark out your supply zones on DXY. So this is one supply zone, and we have this SND week here as another supply zone. So definitely, if the market is coming to this point, then I'll know that today or tomorrow the market should buy and sell all at the same time. So this is for DXY. Then let me just go on to USD card quickly. So USD card is my favorite pair, and bullish on USD card. This structure here is called a reaccumulation. So a reaccumulation is like a continuation pattern. So I'm expecting that once it does all this ranging is doing, it's going to tap into a demand zone and continue to the upside. And that's for long term. That's USD card for long term. And on the 4 hour, we are presently accumulating to the upside. So this whole thing here is an accumulation. This taps into this block because this is a daily order block. So taps into the mini boxes that you see, or the mini gray box here, are a refined zone. So once it taps into that block, then it reverses to the upside. So this will be my first target. Then I'll be looking into this point as the second target, and just leave the remaining volume to run as long as the market can carry it. But in the true sense, we still have a lot of bearish leg on USD card. So once this happens, then you should see something like this before you have your weekly pullback to the upside. So this is the major move. This is just a pullback to give you to satisfy this accumulation they are performing here. So this is an accumulation. Oh, sorry, this one here is the accumulation. So you should have your NFP bringing the USD card to the upside. For Euro USD is presently distributing, and this it's clearly visible on the 1 hour. All right, so euro USD is clearly distributing, and we presently are on a bullish daily form. The euro USD has been bullish for so a long time. This is a break of structure on the daily. So what I'm expecting now is touch into this zone, brings it to this downside, this demand zone, and it continues to the upside. Okay, so that should satisfy euro USD. So in the lower time frame, this is just there is liquidity here because we this is an Asian high. So it will definitely take out this Asian high, this other block, then come to the downside before it continues to the upside. So that's for Euro USD. For GBP USD also, GBP USD is also distributing. So you see I mark this liquidity here. So I'm expecting that it taps into this, it comes down a bit, then it goes to the upside, taps into some supply zone over there, then it continues to the downside, possibly taking out this low. But whatever it is, the first take profit will be at this point. So I'm expecting that once it should react from that point, then take it to this downside. And I think from that point should be about 120 pips. So 120 pips in 1 day is not that bad. Okay. And for I think gold, yeah, I've not touched gold. So gold, yeah, is has been distributing for a long time, and it's been in a range for a long time. So you see these zones I marked here. Presently, I should if I'm ending this whole live stream, I should be going back to my chart to or my MT4 to put in the order. So at this point, it has taken out. I had marked this liquidity zone over I think about some hours ago. So since that it has taken it out, I'm expecting that it does this and it continues to the downside. So presently, what do you see on this this whole thing is a distribution schematic. So you have this says this ranging is just for the market to continue more to the downside. So definitely uh gold will also be following the others to drop to the downside. So I'm expecting that it leads the others, then I'll be taking my profit here. I've actually taken, entered this price since about I think about the beginning of 30th of August. So and I'm just waiting to enter again at this point, then it continues to the downside before before we continue our bullish leg and break this high over here. I think the high is about 1832, 1834. But first you would see some bearish moves for NFP before it continues to downside. And for JPY pairs, let me just look into just one JPY pair. So for CAD JPY is also distributing, and we have this liquidity zone here. Now, this is an imbalance, and within this imbalance, there's another block over there. So this whole thing is a distribution schematic, and we should have it tap into this liquidity zone and bring the price to the downside. And once it brings the price, I'll have this is about 102 pips to the downside. And presently, your daily is still bearish. So there's every possibility that it beats this low over here. But whatever the case might be, it's just to react to what the price gives you. Now at this point, it's just waiting. I'm just waiting for the price to come into this point here. Once it comes to that point, I take my order and I let the price play out. Take my first profit here. Then I expect the unexpected by waiting and seeing if it takes out this low over here. And if it takes out that low, then I'll be taking my final profit at this grey box. Yeah. So uh that'll be about my market analysis for NFP today in the next 1 hour, I think. In the next 1 hour. So I hope you guys enjoyed the stream. If you enjoyed, please give a like and do subscribe to my channel. Thank you guys for